Everyone assumes stocks are the undisputed king for building wealth. For decades, the advice has been simple. Just buy and hold an S&P 500 index fund, and you'll retire rich. But what if I told you that in a market crash, when everything is bleeding red, one of these other assets doesn't just survive, it can actually make you richer? We put gold, stocks, and real estate head-to-head in the ultimate showdown. And the results for the best defensive investment might just shock you. For generations, families have built their fortunes on three core pillars: the explosive growth of the stock market, the tangible security of real estate, and the ancient, unshakable value of gold. Each one promises a path to wealth, but they couldn't be more different. Stocks are your high-flying, fast-paced contender, riding on innovation and corporate profits. Real estate is the grounded heavyweight champion, built on land and leverage. And gold, well, gold is the seasoned veteran, the silent protector that has outlasted every empire and every currency. Today, we're not just looking at who wins when the sun is shining. We're stress testing these titans to see who protects you when the financial storms hit. Which one is the growth engine? Which one is the income machine? And most importantly, which one is the unbreakable shield? Welcome to the ultimate investment showdown. Let's kick things off with the round everyone loves to talk about: long-term growth. When it comes to building wealth over a lifetime, which asset class crosses the finish line first? The numbers here tell a very clear, and for some, a very surprising story. For nearly a century, stocks have been the undisputed heavyweight champion of growth. Since 1928, the S&P 500 has delivered an average annual nominal return of around 10.1%. If you look at the period from 1957, when the index expanded to 500 companies, that number is about 10.5%. Now, it's important to remember these are nominal returns before accounting for inflation. But to put the power of compounding into perspective, $100 invested in the S&P 500 back in 1928, with all dividends reinvested, would be worth over $1.2 million today. No other asset class comes remotely close to that kind of explosive long-term growth. It's the result of backing the world's most innovative companies and letting the market work its magic. Now, let's bring in our other contenders. How does real estate stack up? Looking purely at property values, U.S. residential real estate has seen an average annual appreciation of around 4.3%. It's a respectable number that has consistently outpaced inflation, creating generations of wealth for homeowners. However, that figure doesn't include the powerful returns from rental income, which can push the total average annual return closer to 10%, rivaling the stock market in some periods. But on a national average, it's a much slower, steadier climb compared to the stock market's high-octane potential. And then there's gold, the eternal store of value. Since the US dollar was delinked from gold in 1971, the shiny metal has delivered an average annual return of roughly 8.4% to 10.6%, depending on the time frame. That's much better than you might think, but it's not really designed to be a growth engine. Gold doesn't innovate, it doesn't produce anything, and it pays no dividends. Its value comes from scarcity and thousands of years of history as money. So, for round one, the winner is clear. If your primary goal is pure, unadulterated, long-term growth, the stock market is your champion. Its historical track record is simply unmatched. This is where the showdown gets really interesting. A bull market can make anyone feel like a financial genius, but true security is tested when the markets turn ugly. This round is all about defense. When a crisis hits or the stock market crashes, which asset protects your wealth the best? This is gold's time to shine. While stocks are crashing, gold often acts as a counterweight. Historically, gold has a low to negative correlation with stocks, which is just a fancy way of saying it often zigs when the market zags. For example, during the 2008 financial crisis, the S&P 500 plunged by 37%, while gold posted a modest gain of 5.5%. It's seen as the ultimate hedge against the biggest economic fears. runaway inflation, currency debasement, and geopolitical chaos. This is why we saw gold prices hit record highs in 2024 and 2025, and it's why some bullish analysts are forecasting it could even challenge $5,000 an ounce by 2026. Now, how does the stock market fare in a crisis? Terribly. By definition, a market crash means stock prices are in free fall. While the market has always recovered, the journey down can be brutal. During the 2008 financial crisis, the S&P 500 lost over 50% from its peak. In the initial panic of the COVID crash in 2020, both stocks and gold fell as investors liquidated everything for cash. And what about real estate? It's often considered stable and tangible, and it is. It doesn't have the wild daily swings of the stock market. However, it is far from immune to crises. The 2008 crash was, at its heart, a real estate crisis. Housing prices plummeted, and it took years for many markets to recover. The biggest defensive weakness for real estate is its lack of liquidity. If you need cash in a hurry during a downturn, you can't just sell your property in a day. It can take months, and you might have to accept a fire sale price. So, for round 2, the winner is gold. It's not even a competition. When fear is the dominant emotion, gold's primary role as a safe haven asset comes to the forefront, preserving wealth while other assets are crumbling. Growth is exciting, and defense is crucial. But for many investors, the real goal is creating a steady stream of passive income. This round is all about cash flow. Which asset can you rely on to put money in your pocket, month after month? Here, real estate truly steps into the spotlight as the cash flow king. When you own an investment property, your tenants pay you rent every single month. After covering your mortgage, taxes, insurance, and maintenance, the rest is profit. This rental income is predictable and can provide a reliable foundation for your financial life. As you pay down your mortgage and rents rise with inflation, your cash flow naturally increases, making it one of the most powerful wealth-building aspects of real estate. Next up, we have stocks. Stocks can also be a fantastic source of income through dividends. When you own a share of a dividend-paying company, you get a piece of its profits. Many large established companies have a long history of not only paying, but consistently increasing their dividends. For income investors, a portfolio of these dividend aristocrats can create a powerful and growing stream of passive income. However, dividends aren't guaranteed. In a bad recession, companies can, and often do, cut their dividends to save cash. So while the income can be great, it's generally less reliable than a rent check. And that brings us to gold. In the income round, gold doesn't even show up to the fight. Gold sits in a vault, it looks shiny, but it does not produce a single dollar of income. There are no dividends, no rent checks, nothing. In fact, owning physical gold can actually cost you money in storage and insurance fees. It is purely a store of value, an asset you own, hoping its price will increase. For round 3, the victory goes to real estate. While dividend stocks are a strong contender, the consistent contractual rental income you control directly gives real estate the edge. Every great champion has a unique, game-changing advantage, an X factor that sets them apart. In this final round, we look at the superpowers each asset brings to the table. For real estate, the X factor is one of the most powerful forces in finance: leverage. Leverage is using other people's money to control a large asset. You might put 20% down on a house, but you control 100% of the property. If that property's value goes up by 5%, your return on your actual cash investment is a massive 25%. This amplification of returns is how real estate investors can build substantial wealth far more quickly than with their own capital alone. For the average person, no other asset class offers this level of leverage so safely and easily. For the stock market, the X factor is a 1-2 punch of liquidity and diversification. You can buy or sell thousands of stocks in seconds from your phone. This instant access to your money is a huge advantage over the slow, transaction-heavy world of real estate. Plus, with a single low-cost index fund, you can own a piece of hundreds of companies, instantly diversifying across the entire economy. You can't do that with a single house. For gold, the X factor is its universal status as a store of value with no counterparty risk. What does that mean? Your stock is a claim on a company that could go bankrupt. Your rental income relies on a tenant who could stop paying. Gold is different. If you hold a gold coin in your hand, you don't need anyone else's promise for it to be valuable. It's been recognized as money for 5,000 years across virtually every civilization. It's a financial hedge against the ultimate catastrophe, a form of wealth that exists completely outside the traditional financial system. Each X factor is incredibly powerful, and the winner here truly depends on what you value most: the amplified returns of leverage, the ease of liquidity, or the ultimate security of a timeless asset. So, after our ultimate showdown, which asset takes home the championship belt? The truth is, there isn't one single winner for everyone. The best investment depends entirely on your goals, your timeline, and your tolerance for risk. For the pure growth investor, the young accumulator with decades ahead, stocks are the undisputed champion. The historical returns are just too powerful to ignore. For the defensive investor, the person who prioritizes protecting their wealth against chaos, gold is the clear winner. It's the ultimate insurance policy for your portfolio. For the income seeker who wants to build a reliable stream of cash flow to live on, real estate takes the crown. Its ability to generate consistent rental income is unmatched. But the real secret of the wealthiest investors isn't choosing one. It's understanding the unique strengths of all three and combining them. Think of it this way: stocks are the engine of your car, providing speed and growth. Real estate is the chassis, providing a strong income-producing base. And gold is the airbag, the defensive tool you hope you never need, but are incredibly glad to have in a crash. It's for this reason that many professionals recommend an allocation of 5 to 15% to gold as a permanent part of a portfolio. The ultimate showdown reveals that true financial strength comes not from picking a single winner, but from building a team of champions that work together to grow, generate income, and protect your wealth in any environment. Now I want to hear from you. Which asset do you believe is best for building wealth in today's world? Are you team stocks, team real estate, or team gold? Let me know your winner and why in the comments below. And if you want more deep dives to help you build a stronger financial future, make sure you subscribe. Thanks for watching.